Whoops, I better shut that off. That's the... Hello, folks, and welcome back. I am Jon Najarian, or Dr. J, and this is 3 at 3, 3 at 3 every business day. We bring you unusual option activity, and I've been on the road, so you've had to put up with some weird backgrounds from swimming pools and so forth, mainly because, hey, when it's sunny out, sun's out, guns out. And also, it's tough to broadcast from a big conference with everybody milling around and talking and coming up and nice people saying hi, but a lot of interruptions. So a lot easier out there by the pool. Anyway, let's kick off today's 3 at 3 for the 6th of August, 2021. Our disclaimer, it's for informational and educational purposes only. You need to understand that all investments involve risk. Also, that we have intellectual property rights, which include, but are not limited to, registered marks, trademarks, patents, and copyright on virtually everything you're about to see. So please ask us before you reproduce it in a commercial fashion. So I talked about this one on the halftime report, Hood, which is Robinhood, of course. And as many of you know, I have beat that horse pretty hard as far as saying that these guys are a disruptor, just as we will be a disruptor when you see what we've got coming for you later this year or early next year. The Robinhood, though, some other panelists on the halftime report were pretty dismissive of this, and I think they were dead wrong. And that's exactly what I said that day. I said, I disagree with everything you just said. Anyway, obviously the options have been very active. In the first 50 minutes of the first day that options were listed, which was 2 days ago on Wednesday of this week, the 4th, we already saw unusual option activity, and I didn't make this much on the trade, but when we first targeted these options, the stock was trading around 57, and the 70 calls were trading for give or take $4. They ran to 29 that day. And then, of course, pulled all the way back. But nonetheless, it was still a heck of a ride, even if you got in at 6.5 or 7 like me and got out at under 20 like me. It was still a great day. And we talked about the largest open interests right now are still the, as of this morning, August 70 calls that expire regular August, not the next week expiration August. Very active speculation there, and all the way up to the December 100s. So for this reason, as we were seeing this transpire over the last 2 days, today's the third day of options being listed on Robinhood, I put on a call spread, traded out of my stock. It had already done a fabulous job that had nothing to do with me, just the stock went up from $37 where I was got the bulk of mine to in the 60s, took that off, wrote calls against the rest, in the money calls against the rest that'll likely be taken away. And then I wanted to describe for you what you see on your screen here, which is the straddle. So this morning, with the stock trading at $57 a share, CNBC asked me, "What are you doing, John?" And I said, well, I'm selling the 57 straddle. Why? Well, because volatility, folks, started around 150 in Robinhood. It expanded to 400 the very first day. Now, next to nothing can justify a 400 volatility. The end of the world should not be a 400 volatility. But who are you going to get the money from if it is indeed the end of the world anyway? But we noted that 400 was pretty silly. So this morning, that 57 straddle, which is the combination of the call and the put, you sell both, or at least I sold both. And this looks like that. August 13th expiration, because they couldn't list options that expire this week. So August 13th expiration, the 57 straddle was trading for over $18. And if you divide 18 by the straddle price, 57, you get that that was pricing in a 32% move. Now, it has moved that, and it did that this week. On Thursday, it moved 50% yesterday. But another 32%, I thought that that was not as likely, especially since I don't intend on holding it till expiration. So I sold that straddle for $18. And then I bought the 55 calls, sold the 75 calls in September. 1-to-1, legged into that one, paid a little over $3 for it. So that would have $3 going into 26 times the upside potential gain that I have at risk. By the way, that's trading right around $5 right now. So that one's a winner. But nice to take some premium out of the market on the shorter dated August 13th calls, and at the strike 57 strike, selling calls and puts, both hands out, means that you collect $18 and change. Take a look at where that is now. This is from just moments ago. The 57 calls are give or take $7. They're offered at $6.90, and the others are trading at $8.50. So that means that we're talking about $15.20. It's lost $3 today. That straddle has compacted, crushed by $3 today. You want to learn strategies like that? Don't worry, I'll have a teaser for you. You want to learn strategies like that? We can show them to you. And my brother Pete will be doing just that next week. But let's get to today's fresh meat for 3 at 3 first, shall we? Marathon Petroleum, MPC. Well, because this jobs report was quite nice today, it helped push many of the demand side stocks higher. Marathon Petroleum is right basically at the same strike price, same price it was this morning. It's trading 57.35 or thereabouts. Take a look there, 57.25 just moments ago. Volume 3.6 million against a 4.4 million full session volume average. But look at the strike they're buying. August 6250s. That's regular August. That's not the 13th of August. Regular August 6250s. So you're asking the stock in the next 2 weeks to move $5. Can it do that? Of course it can. But what I'd rather do is buy an at the money one time, sell an out of the money one time against it. If you do that, then you can make money on a much smaller move in the market, and you don't have to be on top of it as much because these are rapidly decaying options. And time value is not your only enemy. Volatility compression, just like I showed you in Robinhood, is also your enemy if you're long. So for every option I buy, I sell an option, I can mitigate some of that, which is something I talk about every day right here on 3 at 3. Let's talk about the next one, 3 at 3. The number 2 is Gap Stores, GPS. Now, this will not cover them for earnings because earnings are the end of the month. So unless somebody knows something about the earnings coming earlier, which occasionally they do for any stock, but for most stocks, if they declare that their regular pattern is to declare earnings, for instance, as these guys are, in the 20th to 25th of the month, these will not cover that because, as you see, these options expire the 13th of August. So they only have one more week to live. 29.15 is where the stock was. They're buying the August 30 calls. They bought 1 million share equivalent. In fact, they bought 10,500 calls. You add 2 zeros to that, you get over 1 million shares that buyer could control with those options. I want to follow those kind of trades. There it is now, 29.23, just slightly higher than where it was this morning. And in the middle of the day's trading range, you see for the 52-week range, which is that second line, underneath the day's range, the 52-week range, basically 12 to 37. So we're at the upper end, but not at the last quartile. We're probably in the upper third, maybe, of the stock price. And I like the trade. I am in these calls. As you see, just came down from July when it was 35. I'm not asking it to move that much, but if it moves, I'll be able to profit nicely from being long these at the money 29 calls. But you got to be quick. When you get a move, take the profits. Here is Bank America. Bank America, I talked about it on the halftime report. Are people betting that this one's going to be going up because the 10-year rate moved from the beginning of the week, 112 to 129 on the 10-year yield? That means bonds down, yield up. Well, maybe, because that's generally good for banks. Stock was 39.92. They bought 12,500. That's 1.2 million share equivalent of the August 40 calls in BAC. So I followed right along with them. And you know what? It has carried through 40. Take a look there. Now it's $40.19. Now, had you been a subscriber, you would have been in at a lower price on that stock trade and also on the option trade. There you see 40 million share turnover today. Yeah, there's a lot of positive bets on this one happening right now. So again, they're buying the August 40s. They're 1 week out options. I bought calls. I am almost ready to pull the trigger on selling upside calls against these right now. Again, establishing that 1-to-1 ratio so that I can have less risk on the table, address time decay and volatility compression. Questions? Hopefully next week we'll be able to get back to answering these questions. Shoot them to me at Jon Najarian. That's Twitter. And my handle is at JONNAJARIAN. And here's that tease. I told you that my brother Pete's going to be talking about diving into summer stocks, the hottest stocks of summer. Pete will be doing that with AJ Monty, our chartered market technician, CMT. You got to check it out, folks. Next Wednesday, it will be at 4 p.m., right at the market close next Wednesday. So if you'd like to join and join live, you need to sign up now because it will fill up. Both those guys are very popular, Pete and AJ. You put them together, you pretty much have a sellout. It is on marketrebellion.com. You'll see it right there. Sign up now so that you can see it live next Wednesday, the 11th of August. Bang. All right, that's going to do it for us today, folks. I hope you have a great day. I look forward to seeing you back here on Monday. Until then, have a great weekend and enjoy. See you then.